US Federal Reserve had interest rates at 3.5% to 3.75% during the Kevin Warsh's inaugural FOMC meeting. That was last week. So if you know a lot about FOMC, or if you have a little idea about what the FOMC meetings are all about, then you realize that this meeting had a hawkish tone. And this hawkish tone is going to affect the prices of a lot of currencies and commodities in the forex market, especially gold. Now, since we trade gold mostly, since we talk about gold mostly, now let's talk about this in the aspect of gold and how it's going to affect gold, for example. So this was a hawkish tone. The FOMC held interest rates steady. Now, if you read the FOMC meetings or statement further, this was last week, Wednesday, 17th of June, 2026. So if you read the whole meeting, you will now realize that what the government of USA is targeting is to make sure that the dollar stays strong enough throughout the year. Now, you may be wondering that how does this affect the prices of commodities or currencies in the forex market, especially gold? So for example, during last week, a lot of traders lose money during last week because they did not expect this to happen. Why? Because they feel like the market has been selling for a long period of time. That was since February this year. You understand? Since February this year, the market has been dropping continuously. You understand? If the market is not dropping, it is ranging. And when it is not ranging, it is selling. Now, think about it. Now that the FOMC meeting has dropped, you understand? Now that the FOMC meeting has dropped, what do you think is going to happen to the prices of gold or other currencies that trade with the US dollar in the forex market? For example, let's talk about pairs like GBP USD, Euro USD, you understand, USD JPY, and then gold, that is SAUUSD, you understand, or prices of silver. What do you think is going to happen to this? Now, remember I told you this was a hawkish tone. So if you watch my previous videos, you realize that I've been telling you guys that the whole market is in a downtrend for now. Do you understand? The whole market is in a downtrend for now. Now, if you remember last year, the market made a very, very surprising uptrend. Do you understand? The market made a very surprising uptrend, which started around 2,500 to about 5,600. Do you understand? Which was the all-time high before gold started selling. And then coupled with the crisis going on between Iran and Israel, you understand, it has also contributed a lot to how the prices of gold are moving in the market lately. Now, again, coupled with the FOMC tone, which is, by the way, a hawkish tone, what do you think gold will do next? Do you think the prices of gold will continue to sell down, or the prices of gold will now start retracing back from this area and going back up? Now, for my own observation, what I expect the prices of gold to do right now in the market is that gold will continue selling down and simply making few retracement. Do you understand? But the overload trend is what? Bearish. The overall trend of the market right now is bearish. And based on this is going to fuel how the market is going to react. Do you understand? The market is going to continuously sell down. We might have gold back to maybe 3,500 or even 2,800. Do you understand? This is going to depend on what? The next FOMC meeting. Do you understand? This is going to depend on the next FOMC meeting, because if the next FOMC meeting is hawkish, just like this one, then expect the prices of gold to continue falling down. Now, this is the fundamental aspect of it. Now, what about the technical aspect of gold on the chart right now? So if you look at gold on the chart, let's take the weekly time frame, for example. If you look at gold on the weekly time frame, you realize one thing: the market has been selling after a huge uptrend. Do you understand? The market has been selling steadily after a huge uptrend. And if you look at it on the daily time frame again, what you see is what? Lower highs, lower lows. If you come down to the 4-hour time frame, what will you see? Lower highs, lower low. And the rest of the things there you see is what? Ranging market. You understand? Ranging market. The market is trading in ranges when it is not selling. You understand? Making ranges of about 1,000 pips up, 1,000 pips down, or 500 pips up, 500 pips down. And then after that, the next thing that happens is what? A huge drop to the downside. Now, when the market starts trading in these ranges, most people mistake it for what? A complete reversal. Most people mistake it for a complete reversal, but this is far from it. The market is not yet ready to reverse. Do you understand? And I told you guys, before you consider that gold is in an uptrend at the moment, the prices of gold has to retrace back to at least above 5,000. Do you understand? Gold has to go back to at least 5,000 for us to consider that the market is now in an uptrend. Do you understand? And even at that, the market has to make what? A new all-time high. Take note of that, a new all-time high. The market has to make a new all-time high for us to have a full expectation that what? Prices of gold are going to continue higher for the rest of the year. But if that does not happen, for now, just take it that what? Gold is still in a downtrend. And what you need to do at the moment, what you need to find right now if you are trading gold as a trader is what? More selling opportunities. If you are buying gold, buy it for short term. Do you understand? If you are buying gold, buy it for short term. But if you want to sell gold, do you understand? If you want to sell gold, sell it and target what? At least 2,800 or 3,500. That's the technical aspect of it. So, all right guys, so if you like this video, make sure you turn on the notification bell and then watch out for my next video where I'll be explaining to you what happens next.